Welcome to Retirement Decoded with your host, Scott Tucker, where we break down the complexities of retirement planning to give you clear, actionable advice. Whether you're just starting out or getting ready to retire, Scott's here to help you make informed decisions and secure your financial future. Tune in each week as we simplify the process and decode the path to a stress-free retirement. Now, here's your host, Scott Tucker.
We're back on the podcast, Retirement Decoded with Scott Tucker. I'm your host, Scott Tucker. Welcome back to yet another episode of silliness here. My associate advisor and podcast sidekick, as just about always, is associate advisor Andre Hootie. Say hello, Andre Hootie.
Hello, Andre Hootie.
And, Andre Hootie, we got some clients the other day that have Eastern European roots. They were born in the United States, but their parents were born in the old country. Mm-hmm. And how do you pronounce your longtime listeners of the podcast will know that you were born in Ukraine and you've lived here now since you were 3 years old, and you're now a U.S. citizen, mm-hmm. And all that. How do you pronounce your name, your first and last name? How do you pronounce it in Ukrainian?
In Ukrainian, it's Andriy Hudey. So you have to roll that R.
So we just call you Andre Hootie.
Yeah.
And I told you quite a while ago, I said, you know what you should do? We should file with all our licensing authorities, the securities and the insurance and all that. We should file an alias for you, Andy Hudson.
That'd be
your stage name, Andy Hudson.
I tried to simplify my name as it was, but I might just need to take it that one more step.
Yeah, fully super duper Americanized, make you just as bland as white bread, right?
I blend in that way.
It's hard to pronounce all these different names. We usually say Andre because people are more familiar with French than they are Ukrainian.
Mm-hmm. Yeah, it's just easier.
And you know who we're talking to, right? So Andre, today on the podcast, we have a question from Jim. Jim says, Scott and Andre, I have invested moderately aggressively. I've invested moderately aggressively over the years, and with 2 years to my retirement, until my retirement. I have to rewrite these, Andre, before I read them.
Yes, because sometimes they're a little jumbled.
Typos and more typos. Mm-hmm. So Jim says, I've invested moderately aggressively over the years, and with 2 years until my retirement, and he says, I'm self-employed, and 75% of our savings will be after tax from selling off our real estate investments. My spouse works in academia for another 10 years. That's a big word, academia. That's how you know that his spouse works in academia. For another 10 years, possibly longer. I'm okay with risk, but wondering if it's time to reduce risk. Well, Jim, usually as you approach retirement, it is time to reduce risk. I would say probably if you get about 10 years out from retirement, maybe even 15 years out from retirement, you start thinking about dialing back the risk a little bit. So Jim says, I've invested moderately aggressively over the years. Don't really know what that means. It seems to be different for everybody, doesn't it, Andre?
Yeah, I mean, it's a very kind of blanket, broad statement to say moderately aggressive. It's different for everybody.
That's like when your doctor says, how many beers do you have in a day? And you say, I have a moderate amount.
Yeah.
You didn't answer the question, Mr. Hootie.
Well, it's moderately aggressive sometimes.
Andre, when you went to the Cubs game, were you moderately aggressive? Our office is probably about a half hour from Wrigley Field, and we're in Chicago. We help clients all across the fruited plain. So that's funny. Jim says, Scott and Andre, I've invested moderately aggressively over the years, and with 2 years to go to my retirement, and I'm self-employed, 75% of our savings will be after tax from selling off our real estate investments. Now, Andre, that's a loaded one there too. So when somebody says 75% of our savings will be after tax from selling off our real estate investments. Now, it doesn't sound like they're talking about selling a principal residence.
No, yeah, it sounds like a second, third, fourth home, whatever it is.
It sounds like it says real estate investments. Sounds like investment real estate. I wish Jim was more clear with us. But if 75% of your savings will be the proceeds, because he said after tax.
Yeah,
I think there's a real good chance this is not principal residence, and I think it's going to be taxed under long-term capital gains tax treatment, mm-hmm. and that's going to constitute 75% of your retirement savings. Andre, how would you feel if you were 2 years from retirement and your intention for your retirement planning was to sell off rental real estate, and then that cash from that sale was going to be 75% of your retirement savings.
I mean, that's that's a little risky. I mean, I'm glad he's thinking about, decreasing the risk, and that's important. And I think it's it's about time. But yeah, that's scary to have all your money kind of tied up, in real estate, and you never know when property values can fall. There's a whole lot of things that can happen.
Well, let's say that Jim and his spouse have a $500,000 property to sell, and then they got to pay long-term capital gains tax, and then that's going to constitute, that resulting money will constitute 75% of the retirement savings. Now I'm scared to death.
Yeah.
Now, if they've got $5 million of investment real estate, they're going to pay long-term capital gains, and then maybe say they have $4 million left, and that's going to be 75% of the retirement savings. Now I'm not scared to death.
Right. Well,
but it's whenever somebody says something's after tax, it's always like, oh boy, get out the asterisk. Or we could say after tax. Is it really after tax? A lot of times people say after tax with us, and the things they describe as after tax are not tax free. Let's say that. They could be a number of other things. So Jim says, my spouse works in academia for another 10 years, possibly longer. So Jim's going to retire in 2 years, and the spouse is going to be still working 8 more years?
it sounds like it. Well,
oh boy.
Good deal for Jim.
Does the spouse know this?
I don't know.
Have you run this by the boss, Jim? Because the tables might turn once you're retired, Jim, and then your spouse is working for 8 more years. Your spouse might be in charge of the reins there and tell you that you no longer get a vote, right, Andre?
Yeah.
If Jim's on the couch.
Yeah, well, we've heard that a time or two.
Yeah. Jim says, I'm okay with risk. Doesn't mean your spouse is. I'm okay with risk, but wondering, is it time to reduce risk? Well, right there, Jim, you're talking out of both sides of your mouth, which is what people do all the time. It's normal. It's human nature. So Jim says, I'm okay with risk, but wondering if it's time to reduce risk. So it sounds like Jim's not as okay with risk as he used to be. No,
and I think he's starting to really doubt his portfolio and whether it's appropriate risk-wise.
Well, it sounds like there may not be a lot of a portfolio, because it sounds like investment real estate might constitute about 75% of their retirement savings.
Yeah,
and the real estate hasn't even been sold yet.
Right.
And Jim, you didn't say where you are. We're in Chicago. We're federally licensed. So we help people all across the country. But there's a lot of risk. There's the risk of where the real estate market might be, or what the ability for you to cash out in the real estate might be. Definitely, I don't know if you're in California or Florida, but definitely keep insurance on these properties. Those seem to be some of the high-risk zones there, right? And you could say that probably about the Gulf Coast and a bunch of places, some of the East Coast even. They get some hurricanes out there. Do not know. But, I'd be concerned about the value of the real estate 2 years from now. If you have to sell these in 2 years, at the 2 year point when you go to retire and you're not going to have your income from your self-employment anymore, now do you have a gun to your head where you have to sell these properties?
Yeah, which then, that puts you in a tight spot. What if you can't cover this month's bills? Are you just going to take the first offer?
Well, what if you have to sell these properties at a certain time and maybe not the best time to sell them? What if prices are still high but it's hard for somebody to take you out if they have to go get financing, it's hard to get financing because the rates are too high? Or what if the property values fall and now folks lose confidence in real estate? Maybe rates fall, but then you get less money than you thought you were going to get. What if there's a stock market crash between now and the next 2 years and people are feeling poor, even though they might have the cash in their securities investments, they might feel that they're poor and they might not want to buy property. There's a lot here.
Yeah, there is. And it's a tough thing to say, but I think definitely, Jim, taking risk off the table is important at this point. Too close to retirement.
So Jim said that 75% of their retirement savings would be their real estate investments, plural. What you could do, Andre, we see folks all the time. I don't know how, Jim didn't say his age. We see folks all the time that as they get to be 60, 65, 70, 75, 80, they have less and less interest in being a landlord anymore.
Yeah, that's a great point.
Yeah. And also, you can hire a management company, but management companies, they just kind of get in the middle and they're the messenger a lot of times. They're doing the job you're used to doing. Something you might do, Jim, if you have multiple properties, what we oftentimes recommend to a client that maybe feels they have too much real estate, not enough securities, not enough cash, whatever. Jim, if you have multiple properties, you might pick your least favorite property and sell that off.
Yeah. Start small.
Yeah. So just what's the pebble in your sandal there? What's the most annoying property you have? And sell that bugger. You might find life's a lot more enjoyable, and maybe you can over time. You know how there's when you're Bob Brinker used to be on the radio. He's retired now, and there's a thing called dollar cost averaging, which is what you do. Jim, I know you're self-employed, but say if you have at the company, we have a Roth 401k. So Andre, every 2 weeks when you get paid, you automatically contribute X percent into the Roth 401k, and the company automatically matches you 6%.
Yep.
And that's called dollar cost averaging, because no matter if the market's up, down, or whatever, that's still the same amount of your check going into the market.
Yeah.
And so if the market's high, you're buying less shares. If the market's low, you're buying more shares. Well, you can also do that in reverse when we're taking distributions. And so, Jim, you have real estate investments. Say you have 5 different properties. Well, let's make it less confusing. Let's say you're going to be retired in 2 years. You got 4 properties to sell. Maybe you sell one every 6 months. So that kind of spreads the market valuation risk on the real estate.
Yeah.
And you can start to feel, I think right now, Jim, you probably feel like you have too many eggs in that real estate basket. I would feel that way, Andre. If I had 75% of my retirement money in real estate, I would be a little uneasy.
Yeah, that's hard. That's hard to get access to that cash. That's a physical thing you have to sell. You have stocks, you can sell them whenever and get the cash. But it's a big headache to get rid of property.
And I'm reading between the tea leaves too, but the way he says that, he says 75% of our retirement savings will be from selling off our real estate investments. It sounds like he's not planning on selling them off 10 years from now. It sounds like he's planning on doing it in 2 years.
Yeah.
That's really what I can read the tea leaves. He didn't spell it all out, and we're not having a conversation with Jim right now. But it sounds like he's looking to get out of this at 2 years.
Yeah.
And it might be a good thing to start unwind it now, so that you can the market values are kind of evened out that way.
Well, and it's just less of a headache for Jim too. It's trying to sell. Let's just say he does have 4 properties. Trying to sell 4 properties at once, I can't even imagine the stress. But one little by little, you get your feet wet in the market, right? You make connections with a real estate broker or whoever it is, and you kind of go take things slow versus having to just light a fire under and get everything gone in a day.
Usually when you go to sell real estate, there's something that the realtor, or even if you're going to do it yourself, you're going to tell yourself, or your realtor is going to tell you, hey, that needs to be fixed. Hey, that needs to be prettied up. Nobody wants to buy a problem.
No.
And so there's going to be repairs or deferred maintenance, or especially on a real investment property where maybe you haven't gone over there in a couple of months and you don't realize, that fence is broken, or there's a crack in the concrete, or whatever's going on. There's usually deferred maintenance on rental real estate. That's what we're talking about, and I think we are. Just curb appeal. Even if you're selling a 4-unit apartment building, curb appeal still matters, because it matters to the buyer of the building and also matters to the tenants.
Yeah, exactly. And I mean, if you don't want to do that, get ready to start dishing out credits, and then you get less than even you thought before, right? So it's a lot.
Boy, I think we just killed Jim's dreams of retiring from self-employment.
Well, yeah, Jim, make life easier. Start decreasing that risk.
Yeah. And the other thing too, your spouse is going to work 10 more years. Hey, this could follow with something we've talked about a few times lately: is get a part-time job at Costco. Mm-hmm. Now it seems odd to me that you're going to sit on the couch or not sit on the couch for 8 years while your spouse keeps working. Yeah. Is that really? I understand the stresses you're under with self-employment and all this kind of thing. But you're going to be selling off the real estate, the investment properties and stuff. You might find you need something to do, or it might help you in your marriage that you have something to do too. I wonder about that.
Well, even just from a health standpoint, though, we hear clients tell us all the time that they feel more spry, more young when they get up and move around every day, even if it's for a couple hours. Some part-time 3-hour, 4-hour thing a day.
Give you a reason to get out of bed and take a shower.
Yeah.
We've had folks tell us 75 and 80 years old that they're still working because they have friends that stopped working and passed away a month later. That's really depressing, but there's something to be said for that. You don't need to work like you're 25, but when you're 75, you maybe ought to have a little something to do. I don't know. You got to get really good at filling that calendar, I guess.
Yeah, I can barely, sit still for a 3 or 4 day weekend. Throw a week or 2 weeks. I don't know what I do with myself.
It is something, isn't it? Your brain can race and all that. And you need something to do. I tell you what. Well, Jim, hopefully we've helped you or discouraged you from retiring, or I don't know. Don't know what we've done here, Jim. If you'd like to get our phone calendar, 15 minutes for free in the coming week over the telephone, and we're in Chicago, but we are federally licensed. We can help people all throughout the United States and the territories and all that kind of stuff. Just go to tuckerretirement.com. At tuckerretirement.com, you can click and pick a time on our calendar, schedule yourself right there, and we'll be able to talk to you over the telephone together and sort this out with you. We want to get the best outcome possible for you. There's things, you're 2 years from retirement, there's things baked in the cake, but there's also a saying, I think it was W. Clement Stone that said, little hinges swing big doors. And so maybe we could just find a couple of blind spots or a couple of glitches to fix and hopefully come out with a better situation. Sometimes this helps to have somebody to talk to who you're not married to, because your spouse probably can say, hey, why don't you just work 10 more years, and so there's not an 8-year gap there.
Yeah. One
person working, one person on the couch. tuckerretirement.com. You listened to yet another episode of the ramblings of a short bald man, namely yours truly, Scott Tucker. Hope you like the podcast, Retirement Decoded with Scott Tucker. Go ahead and share the episode on Facebook if you would. Give us 5 stars on whatever platform you use, or a thumbs up or something or other, and we'll talk to you on the next episode.
Scott Tucker Solutions, Inc. has a strategic partnership with tax professionals and attorneys who can provide tax and or legal advice. Neither the firm nor its agents or representatives may give tax or legal advice. Individuals should consult with a qualified professional for guidance before making any purchasing decisions. A Roth conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The views and opinions herein are those of Scott Tucker Solutions, Inc. and do not necessarily reflect the views and opinions of AE Wealth Management, LLC. Investment advisory services made available through AE Wealth Management, LLC. AEWM and Scott Tucker Solutions, Inc. are not affiliated companies. Insurance products are offered through the insurance business Scott Tucker Solutions, Inc. Scott Tucker Solutions, Inc. is an investment advisory practice that offers products and services through AE Wealth Management, LLC, a registered investment advisor. AEWM does not offer insurance products. The insurance products offered by Scott Tucker Solutions, Inc. are not subject to investment advisory requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying ability of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Scott Tucker Solutions, Inc. is not permitted to offer, and no statement made during this podcast shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Scott Tucker Solutions, Inc.